So I wanted to take a little bit of time and talk about the so-called Santa Claus rally, as well as the expectations for 2026. And usually after Thanksgiving through the end of the year, we typically have a so-called Santa Claus rally where the market performs quite nicely. And the reason for that is if you think about any price, it's dictated by supply and demand. And most institutions are done with their tax loss harvesting and selling. Mutual funds are completed by the end of October, sometimes by the end of November. And then most hedge funds are also kind of done by now because liquidity starts drying up. So incrementally, your sellers are out of the market, and any incremental buying has a outsized impact on the move in the market. So that's kind of what's going on right now. It's been more of a risk-on type of environment. You've seen a rebound in the AI stocks. You've also seen very nice performance by any companies who have debt, as we're looking at an environment where the expectations are that interest rates are going to continue to fall. So as we go into 2026, obviously it's a question of how is the market going to perform. And if you look at earnings expectations and estimates for 2026, they're actually quite good. Analyst consensus expectations for earnings growth for the S&P 500 is growth of 14.7% in 2026 and 14.6% in 2027. That's very healthy earnings growth. And then if you look at gross margins, I do think this is going to be the big story. Gross margins are supposed to do very nicely. So we're exiting the year with gross margins of 13.3% for the S&P 500. They're expected to grow by 14.3% in 26, and then expected to be at 15.4% growth in 2027. And basically that's the application of technology and AI to a broader subset of companies. So we've seen the AI move with Microsoft and the Magnificent Seven. We saw some broadening out this year. And then most recently, we've seen this rotation in the market. And I think that is going to be a big as we get into 2026. So kind of one of the basic rules of economics is you can't earn an outsized return for a prolonged period of time. If you look at the Mag 7, they've actually had their market caps double just in the last 2 years. So they've gone from 10 trillion to 20 trillion. But you're starting to see competition, and interestingly, they're competing with each other. So if you look at gross margins, they are actually supposed to rise at 12.7%. Which is below the expectation we're seeing for the rest of the market. So again, I think being more overweight towards value will pay off next year. And then emerging markets, we've seen really nice performance this year. I think that's going to be more of a long-term trend or an intermediate-term trend. I think that we will see emerging markets do well based off AI, the increased spending by China throughout 2026, and that could move up to 2027. And obviously it's coupled with the lower dollar as well. So thank you so much.